Hi there, welcome to Kneppy Invest. If you know anything about me at all, you would know that October is one of my favorite times of the year because it is quality reporting season. We are going to see a plethora of Appendix 4Cs and Appendix 5Bs released over the next 2 weeks. We've seen a trickle come in already, only 3 Appendix 4Cs being released, which is unusual because this time last quarter, we had already seen 10 Appendix 4Cs be released. This point in time, only 3. One of those companies is Sensera SC1, and that company is a shell right now. So they have no business model. They are waiting for another company to do a reverse takeover of that shell. But the first legitimate company on the ASX to release their Appendix 4C for this particular quarter was Jaxsta. So I thought I would do a video, reward this company and their management for being the first company to release their Appendix 4C for the September quarter. Now, to be honest with you, I know nothing about this company, so it was interesting to delve a little bit deeper into exactly what this company does. Jaxsta is a music credit database company. Now, when I saw they were a music credit database company, I wasn't quite sure what music credit means. I thought it had something to do with neighboring rights or performance rights, which means, say you create a little piece of music and you want to be compensated if, say, a restaurant plays your piece of music over their airwaves, or film uses your music in a movie, even a short, or a TV show uses your music, or someone uses your piece of music in a YouTube video. That's neighboring rights and performance rights. I'm not sure exactly the exact definition or differences between neighboring rights and performance rights. If you do know the difference, just leave it in the comment section of this video. But that's nothing to do with music credit database that Jaxsta has created. And music credit is exactly what it says. Credit, just like, say, a film credit. So you watch a movie at the cinema and you stay for the end credits. So those end credits are all those people who played a part in the making of the movie. And the same thing is true for any piece of music. There's always going to be a group of people who played a part in the creation of that piece of music. There could be a producer, sound mixer, just saxophone player, a triangle player, or a flute or recorder player. And that's exactly what Jaxsta's music credit database is trying to do. They're trying to create this database of all the people who played a part in all the music out there. And this might become important. Say you want to create a little bit of music and you need a saxophone player or a triangle player or a sound mixer. You can go to this database and find some really good people out there who could help you create a bit of music. There's probably lots of other applications that I haven't thought of out there. Now, this company was created by a musician, so that's very important too. I'll talk about that in a second. But Jaxsta was founded in May 2016 and listed on the ASX. It was a reverse takeover of Mobile Arm. I've always wondered what happened to Mobile Arm. Well, Mobile Arm is now Jaxsta. It's just a completely different business model, and that reverse takeover was done in December 2018. Current CEO is Beth Appleton. She's been in that role since April of this year. The previous CEO was Jackie Ruiz School, which was the co-founder with Louis School. And Louis School was, I think he's Dutch or Danish, and he is a musician composer. So that's just telling me that if one of the co-founders was a musician, was in the music industry, more than likely there is a need and a want for a music credit database. So that tells me a lot, just because someone within this industry created or co-founded this company. And both Louis and Jackie Ruiz both have a 7.57% stake in the company. So they are the largest shareholders of Jaxsta. I think Jackie recently resigned from the board and as a director recently. That could have been in July. So even though they are co-founders of the company, they're neither CEO or are on the board or are not directors of this company just now. The market cap of Jaxsta right now at 1.6 cents is $5.5 million. So fairly low, a very small cap company. So you might call this company a micro cap on the ASX. And the ticker code for Jaxsta is JXT. Now on to looking at the Appendix 4Cs, particularly paying attention to the cash flows from operating activities. But before we have a look at the September quarter for financial year 22, let's just go back 1 year and look at the September quarter for financial year 21. The reason I do this is just want to see how the company has performed over the past year. Now, I haven't really paid attention or taken notice to this company in the past. And there is one main reason behind that, and it's because of the cash receipts. So 1 year ago, this company had $4,000 of cash receipts. So again, $4,000 of cash receipts. So not a lot of cash coming into this business. So at this point in time, there's business model, and you could say this company is just a concept or a story because the lack of cash receipts at this point in time. Now, the company is not spending a lot of money, but they're still spending a little bit of money. And because they have no cash receipts at all, the company burned through $1.76 million of cash in this particular quarter. And because they are burning through cash, there is an increased likelihood that this company will have to do capital raisings. And that's exactly what they did in the September quarter of financial year 21. They did a $2.5 million capital raising and finished this quarter with $4.2 million of cash. So let's have a look at the September quarter for financial year 22, just to see if this company has increased their cash receipts at a good rate. And you could argue with me that the cash receipts have increased at a significant rate. They have increased, or they have tenfold increase in the past year. However, that would be on a low base, $4,000. Now, in this quarter, they received $40,000 in cash receipts, but still, it's greater than the previous year. The other thing you'll notice, if you look at the cost or the payment, they have decreased from last year. So this company is decreasing their costs. So that is one thing they actually did mention later in this particular Appendix 4C. So instead of burning through $1.76 million of cash, they only burned through $1.38 million of cash in this particular quarter. However, in saying that, when you look at the cash on hand, they only have $1.7 million of cash on hand at the end of this particular quarter, which is a concern. And because of the cash burn rate, it does look like, based on the cash on hand, they will have to do a capital raising soon. And the company addresses this in Section 8 of the Appendix 4C. And whenever you're concerned, the company might have to do a capital raising because of lack of cash on hand and the cash burn rate, always go to Section 8 because you will get a lot of questions answered in that section. So let's have a look at Section 8 right now. Section 8 is really important for those, particularly shareholders, who are concerned about the cash burn rate and concerned about the cash on hand and whether the company can continue as a going concern, because every company that releases an Appendix 4C have to answer the sections 8.1 through to 8.5. So you start off with the cash burn in the previous quarter. For Jaxsta, that was 1.4 million. And then you look at the cash on hand. For Jaxsta, that was 1.7 million. And then you estimate the quarters of funding available based off the cash burn and the cash on hand. For Jaxsta, that was 1.23. If that number is less than 2, the company has to answer 3 questions in Section 8.6. So let's go through each question that Jaxsta have to answer. Does the entity expect that it will continue to have the current level of net operating cash flows for the time being? If not, why not? So does Jaxsta expect the cash burn to be about $1.4 million moving forward? And Jaxsta replied, no. The company commenced cost-saving initiatives in April, and some of the activities will continue to take effect over the next 2 quarters as employees finish their notice periods and we exit the office and its related costs as we move to a full remote working operation. Repeat that bit. As we move to a full remote working operation. I have to applaud Jaxsta management for going down this route. This is going to happen more and more often in the future as companies realize that a working from home is way more productive than the office environment. The office environment is a dying thing. There is no need for you and me to be working in the office. We are not more productive in the office. We don't have spontaneous collaboration. We don't increase our innovation if we're working in the office. Those have been proved to be false. And the only reason we work in an office in the past is because of a technology gap between what we're able to do in the office compared to what we're able to do at home. And that technology gap has been bridged. So right now, even though there is resistance, office environment is a dying thing. I think there was the Charter Hall CEO said, we all have to go back to the office. We all have to go back to the past. But the past is the past. The future is working from home. In a working from home environment, we are more productive. So people would say, again, spontaneous collaboration, innovation, they also say social aspect of the office. I'm going to miss all of that. Well, we go to the office to work, not to socialize. And I have no doubt when we're all working from home in the future, and we are all going to be working from home in the future, unless we have to go to a factory because we manufacture something like Tesla, something like that. I think that's going to still be there, the factory, but the factory is different than an office. I think in the future, when we're all working from home, there actually will be increased socialization because that will be a significant factor, a significant thing when we're working from home. So maybe at lunchtime, I will go to the local cafe and I will have lunch with a few of my colleagues who live nearby. Or maybe we'll have a sporting team and we'll play other company sporting teams, something like that. I think the social aspect will still be there, but we will be more productive when we're working from home. Anyway, rant ended, and let's finish off this answer because there are some interesting things here. Additionally, the first quarter included $110,000 in annual costs that do not occur in the next quarter. So already the cash burn in the next quarter is about $110,000 less. Our quarterly burn rate is expected to reach $700,000 by the end of the March quarter. So that's 2 quarters' time. So their cash burn is expected to halve in the next 2 quarters from $1.4 million to $700,000. So I really like management of this company simply because they have a notion of how important this is, how important to keep control on your spending. Unlike a company like Dubber, and the management of Dubber, I've already done a video on that. You can have a look at that video. Anyway, so this actually does make me impressed of the management of this company because they're aware of this. They're aware of how important it is to have control of your costs and your spending. Now let's go to question 2. Has the entity taken any steps, or does it propose to take any steps to raise further cash to fund its operations? And if so, what are those steps and how likely does it believe that they will be successful? So this could, Jaxsta could answer this with a capital raising. That's how we're going to raise further cash. But Jaxsta goes down a completely different path. And they answer this question as thus. First of all, the company will be receiving an R&D tax credit in October of $1 million, which was lodged in September, in addition to its EMDG grant. Had this been received by the 30th of September, the funding available per 8.5, so if we go back to 8.5, that number was 1.23. And remember, if that number was less than 2, they had to answer these 3 questions. And Jaxsta says if they actually received that funding, that number would have been 2.02, and they wouldn't have to have answered these 3 questions in section 8.6. And then they go on a little bit further in regards to a convertible note with SongTrader, with a further option to invest a further $3 million. And they're saying that would increase their cash on hand as well. So let's go to question 3. Does the entity expect to be able to continue its operations and to meet its business objectives? And if so, on what basis? And this is a really important question, saying, is the operations, or is this company an ongoing thing? Are they able to continue the operations in the future? And the company said yes. The company's cost savings and immediate R&D incentive funds means the company will have $2.8 million in reserves, and is looking to reduce its cash burn rate to $700,000, which I've already mentioned, meaning it will have approximately a further 12 months of cash as it seeks to launch its new business to consumer offerings to further bolster its revenues and attract further investment. So initially, when I saw they had very little cash on hand based off the cash burn rate, I thought they would have to do a capital raising really soon, like in the next quarter or so. But they're saying they have at least 12 months of cash on hand. So no capital raising for at least the next 3 quarters. Maybe in 1 year's time, they will have to do a capital raising if cash receipts don't don't start to accelerate from here. Now onto the receipts history for Jaxsta, and this is usually my favorite part of these videos. My favorite part when I look at Appendix 4C, I look at the cash receipts and then I compare the cash receipts of this particular quarter to previous quarters, and I want to see some trend in cash receipts over time. Unfortunately for Jaxsta, cash receipts right now are really low. There was an influx, a fairly big influx of cash in September quarter of 2020, $500,000 of cash. But more than likely that was because of an announcement they made, or in regards to an announcement they made in September 2020, when the share price rose 300% in one day. That announcement was titled, Jaxsta executes combined commercial agreement and investment from Songtrader for additional 1.92 million. So I'm thinking maybe that had something to do, that $500,000 of cash receipts had something to do with that. So I'm not sure if it's really cash flow from operations. But anyway, if we disregard that, cash receipts have climbed over the past 4 or 5 quarters, increasing from 4,000 to 21,000 to 31,000 to 44,000 and now to 40,000. So still really low. And typically when I see cash receipts this year low, I don't really pay attention to the company just yet. I need to see the cash receipts growing significantly from here before I become interested in the company. Now onto the chart for Jaxsta. This is the weekly chart going back to when they reversed or did that reverse takeover of Mobile Arm back towards the end of 2018. And it's not a pretty picture for Jaxsta and their shareholders. Now, there's been a couple of times when there's been a little bit of excitement in the market around this company. The first time was way back in March 2019, when the share price rose from 12 cents to a high of 46 cents in about 3 weeks of trading. So something happened to cause that excitement in the company, but it was short-lived. And the share price kept on dropping or moved into a downtrend from there. Moved all the way down to less than about 2 cents back in March of 2020. So during the depths of the COVID-19 financial panic, share price fell below 2 cents for a very brief period of time. Share price then consolidated, but then in September 2020, the share price rose from, we'll say about 3 cents or 2 cents, all the way to a high of 18 cents in about 2 weeks of trading. Because one day the share price rose 300% because of that announcement I just mentioned, that Jaxsta executed combined commercial agreement and investment from Songtrader for initial 1.92 million. But that excitement that caused the share price to increase something like 9-fold in a very short period of time fell away fairly quickly. And ever since then, the share price of Jaxsta has just been going slowly down, so grinding slowly down week on week, moving lower. And right now the share price is around about 1.6 to 1.8 cents. Before I started doing this video, the share price was 1.8 cents. Then we saw a little bit of selling around midday on the 12th of October. Share price right now at 1.6 cents. Trading has just stopped for the day. And I'll have a look at the share price of Jaxsta at the end of trading on the 12th of October. Right now, around about 1.6 to 1.8 cents. And there's no end in sight to the drop in the share price for this company, even though the valuation of the company is around about $5.5 million. That's all I have for this look at Jaxsta's Appendix 4C for the September quarter. The first legitimate company to release their Appendix 4C in this particular quarter, so I had to do a video on the company. If you know a little bit more about Jaxsta, if you are a musician or in that industry and you know the benefits and there is a need and a want for the type of company, for a music credit database, I'd love to hear your opinion, your thoughts. So leave in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.